Welcome to the Mortgage Broker Podcast, tailor-made for Canadian mortgage industry professionals. Proudly presented by A Better Way Mortgage Group, this podcast is your trusted source for insider insights, market updates, and strategies to elevate your career in the ever-evolving world of mortgage brokering. Whether you're a seasoned broker with A Better Way Mortgage Group or an industry enthusiast looking to stay ahead, our episodes are designed to empower you with the knowledge and tools you need to excel in the Canadian mortgage space.
All right, we're back for another episode of the Mortgage Broker Podcast. This is actually our first iteration of the Behind the Legends series, and we have the legend of all legends, John Webster. Very, very honored to have you here, man. Really appreciate it, and just want to, first and foremost, thank you for being here.
Well, my pleasure. Welcome to beautiful Toronto.
The big smoke.
Yeah.
Yeah, we love being here. It's the energy here is awesome, and yeah, I mean, be able to be close with guys like yourself. We just don't necessarily have those types of leaders in the West, so it's obviously nice for that reason. But more so, I just want to get into your past and how much you've done for this industry. You have a pretty decorated career, and you're going to continue to keep moving forward. You know, starting with the Hall of Fame in 2009, and beyond that, Maple Trust. London Trust, it all goes back. I don't want to go too deep there because I know you've talked about that a lot on previous episodes, and I really want to get into the mind of like just being a legend and being able to operate at the, you know, the level that you've operated
Being a legend in my own mind. So,
yeah.
Okay.
Well, it's not easy to do, especially in this space, and you've been such an innovator. So yeah, why don't we just start there? I mean, like, I guess I want to go back to the early beginnings, like what ultimately led you to come into this industry and stay in this industry and be so passionate about growing it to where you know, to what you've done to support us in this industry and ultimately allow us to have the careers that we have had, because I truly believe you're a huge part of all of our careers.
Typically, like many stories, it was totally accidental. I never had the ambition to be a lender or a mortgage lender or a banker. I trained as a lawyer. I was working on Bay Street. I got wrapped up in politics, and it took me away for several years, both at the provincial and federal level, from practicing law. And as a result, a very quick story, someone I'd worked with in politics wanted to buy an ad agency that we were using in the 1988 federal election campaign, and we had an offer in. So they asked me, would I like to go in there as the COO, because I'd been working with them intimately and knew the business, and they wanted me to go in and see where we could jack up revenues and cut expenses, typical stuff. And so I signed a personal service agreement, and the deal fell through. And so they weren't sure what to do, and I wasn't sure. I said, so what do you want me to do? And they said, well, we have this little startup trust company, an Ontario-based trust company that was regulated at the time in Ontario. And in those days, there were Ontario loan and trust companies. And later on, they made them all migrate in the regulated space to OSFI and to be federally regulated. But there were a number of them back then, and there were a number of bigger ones, you know, Royal Trust, National Trust, and then there were a number of smaller institutions. So they had one which was essentially a startup. They'd bought the charter, and they just said, look, the other deal's not going to work out. We want you to go there and run this trust company. And I said, well, what does it do? Well, right now, does some mortgage lending, mostly in the new home space in Toronto, with some very prominent developers and builders who are minority shareholders. And I said to them, look, I don't know anything about mortgage lending. And they said, well, you'll sink or swim. And in addition to that, I said, when I was going through my articling rotation and working in the legal community, I said, I've never done a mortgage. So I've done some research on some litigation I know how the charge works, and you know, I was relatively familiar with some of the legal aspects, but it was not something that I would have wanted to do if I'd stayed in the legal practice. So it was kind of an interesting experience, and took that over, and we did land interim residential mortgages, and we were growing that business. It was small, and it was becoming successful. And in those days, only brokers that I dealt with, I didn't pay them, right? right? So I wasn't that popular. So it was an alternate deal, higher coupon. They would come to me, kind of like a little bit like the alternate space, except it was regulated. So it wasn't like you could do what would be described today as a typically private mortgage. It was sort of similar to what Equitable did in the early days and Home was doing, and that kind of residential lending. And so that was growing along, and my shareholders were the minority guys were thinking that for a bunch of reasons with their much bigger, more prominent businesses, that this wasn't as good a fit. And so they were looking for takeout, and they were going to sell it to a mutual fund company, or they talked to one. And when I met with them, I was not convinced that that was going to be a good career move for me. And somebody introduced me to a company called Maple that was basically created by the derivative group at First Marathon, which was an independent investment bank in Toronto owned by Lawrence Bloomberg, who was very prominent. And they'd opened a bank in Germany with the investment bank to do a fairly prominent tax trade that involved dividend strips with the bank, but they only did it once a year. So they had money from Germany and nothing to do with it. And they said, look, we want to open something in Canada, start a trust company, but we only want to do insured mortgages. We don't want to take any risks. We want to look at it as basically as if we were trading a income sovereign bond book. So you get everything insured by the government of Canada, and we'll look at it as a bond with the additional security. And that was their level of interest. And the CMB, the bullet bond, hadn't been, it had been conceived but not implemented by then. So I sort of got out in front of that and looked at, was this possible to build something like this? So at the time, First Line was still in the business. They were the dominant lender, owned by CIBC. They'd been created by the sale of a small company that I had competed with called Council Trust. They'd sold to CIBC. And the rest of the business was really dominated by the monolines, by both FirstNat and MCAP. BMO was still in the business at that time, but First Line was the behemoth. They were the giant. And so I looked at it and said, how would we go about this? So I just, pulled together some focus groups and brought some brokers in. I said, try to tell me what you would want to see in a monoline that in this case would be regulated, but what are you looking for from a value proposition point of view? Where are the pain points that you're experiencing now? And so I did two things. I used it to test and learn what would this lender look like and how would we appeal and what kind of a model would be innovative and different and hadn't been done before. But at the same time, I got these brokers that participated to be part of the Ginger group. So I knew when we launched, I had people that had production and experience, and we could start to get some volume. And so that essentially what happened. We created vended London Trust into Maple Trust, got the jurisdiction changed from Ontario to the federal government, to OSFI, and launched with what would now be six BRMs, and said, I'll just start in the Toronto market, and if we're successful, I know it'll work anywhere else. And Marathon, First Marathon at the time, had a little mortgage bank, which still exists today, Marathon Mortgages. And they were concerned that our plan was too aggressive because they'd been at it for 5 years. And in my view, not very successfully. And so I said, no, this is a different model. And one of the things that I introduced was what I looked at was the economics with the lenders and the brokers weren't aligned. And so I wanted to have a completely variable compensation program for all of my underwriters, because I knew that people would only spend time on deals that they knew they were going to get paid on. And also we had modeled what we thought the efficiency would be in the look to book compared to what most lenders were doing at the time. The challenge was in the regulatory environment, they thought there's too many opportunities for self-dealing, right? So, basically Dean and Darren get cozy with their underwriter, and then you're getting deals done that shouldn't be done and putting the lender at risk. So we had to build a bunch of checks and balances, pre-fund, post-fund, clawbacks, all this stuff to satisfy them. And I think that was one of the key essential ingredients to the success of entering into the broker space, because we did very, very well in a short period of time because the service levels were so good, right? First line was run like a typical bank, and you had BDMs going out and they'd say, okay, Dean, Darren, Jason, send us your deals, right? And then where did the deal go? I got a problem.
Yeah.
Call the BDM. BDM go, oh, I got to call the underwriter. Underwriter doesn't call you back. And a lot of broken telephone, lot of inefficient process. And so we had studied out sort of the workflow and looked at what do you need to do? You need to marry the underwriting with the funding. So then we had dedicated funders that only worked with those underwriters, and they were part of the team with their broker partner. And then I knew to scale this, it would be successful, but we couldn't use this model unless we had quality control. And all the other lenders would take from all the brokerages, all the agents. And I said, no, I want to build a relationship with people that want to be true partners. And so we created something called Maple Club and a President's Club, and we made it an exclusive thing that you wanted to belong to, and that also you got exceptional service. And we were in the forefront of. I mean, a lot of the other lenders after the fact blamed me for all these trips and other things that took place, the surprise and delight, the junkets, because that wasn't happening then, right? And so I said, no, let's make people feel special because they want to get paid, but what they really wanted, I thought, was recognition. Because people look down their noses at mortgage specialists. It's interesting in asset classes still this day. Wealth advisors are viewed this way, but mortgage specialists are viewed as something lesser. And it's ironic
Yeah.
as how complex, as you guys know better than anyone else, the business has become, and how not just with all the regulatory changes, but with keeping up with technology and consumers and what has happened in the space, and mortgages still being, the biggest purchase that most Canadians will ever make. But at the time, people thought, we'll hire underwriters who aren't very experienced, not pay them a lot, and then wonder why the outcome wasn't good. And I thought that's silly. Like, if they're adding to the value proposition, I looked at the whole sort of end to end in the home buying journey, let's say, and I thought realtors are making way too much money here. Lenders aren't making enough money, but the people involved in that section of the pie that are adding the value, which is really there, nothing takes place without the sale. So whoever originates and has distribution is key, which I think is the success of DLC was understanding maximizing distribution in the space, right?
Yeah.
There are a number of aggregators that gotten together and tried, and they focused on the volume bonus, but they didn't focus on recruitment. They didn't focus on building the skill sets that you needed to be successful in the business and stay and build value. And so we were almost obsessed with being able to deliver a high quality service to loyal customers and treated people well. And we made so much noise that I was running around securitizing all my variable at the time, because I could put the fixed stuff into the CMB to provide liquidity and funding. But to fund the variable, I was outstripping my deposit base both in Canada and Germany because we were growing like a hockey stick. And so I went to all the banks and I said, why don't you securitize these mortgages for me? And at the time, I had both CMHC and then it was GE before now it's Sagan, and got them accredited. And we were able to get rated and to create securitization. And so I just said to the banks who were doing big pools with credit cards and car loans, why wouldn't you take the mortgage? You've got the government of Canada guarantee, which you don't have with those asset classes, and you have the underlying security of the real estate. And so that became very successful. And through that process, Scotia, who was my bank and not participating in the securitization, said, how did you get from here to there so fast and we haven't? And so that led to discussions, and they said, we'd like you to consider coming to us and sell to us and build that model into our business. So essentially, a lot of the same people started with me at London, went to Maple, stayed at Maple, went to SMA, or still at SMA. Now some of them are joining me at Maple Financial. So it's been a long cycle, and I've always used the same model and approach.
I was going to ask one question, like building trust with brokers was, you did that in a few areas, or where I see is one, when you first started Maple and started working with brokers, getting that feedback loop from them obviously helped build trust. But then the trips and to me, the trips were very important, not just because I want to go party,
No.
but I wanted to hang out with you and get to know you, get to know Mike Dier, get to know the people at the top that I'm working with, because we don't really get that opportunity with other lenders. Like,
Not to mention some of the best brokers in the country too.
Yeah, when I looked at it, the same thing with the BRMs, because they were all remote when we had the conferences, right? You need to be in a setting with your peers and talk about best practices, common
100%.
frustrations. How are you approaching
Yeah.
this? And so the trips were very successful. There was the social aspect, which is important because you're building relationships through
Yeah.
that social aspect, but you're also learning from each other. And what I was really pleased with was so many brokers, as you know, met on those trips and then developed lifelong friendships and are still friends today, which I thought was pretty cool.
Like my best friends in the industry are from those trips.
Yeah, that's
like
what I mean.
Joel Samet, who's our partner, is
Yes.
from your trip. So like it is a big piece.
So a question for you though, when you're growing Maple and it's kind of growing like wildfire, like what was the barrier of entry for a broker to work with Maple and attach to Maple? Like, did you have very strict requirements on who you deal with? Like, who were you bringing in and who were you letting kind of test your pilots?
That's a great question. Then you signed up with a lender, and whether you were just an agent, you signed up, the firm would be signed up that you were with, and then the agent underneath would just fall in line. We vetted and signed the agents and the broker. And our conflict with the broker houses was that, I wanted to work with the people that were producing it and wanted to make sure they got the lion's share of the compensation. And that's not how it was structured, right? In those days, you got the origination fee, but the house kept pretty much the volume bonus. And the big argument was, if you want to work with us, you have to be with MI or you have to be with Invis. And they would come, and I tell the story all the time. They would kick me out of their, they had rate sheets in those days, and they would just take our name down. And I'd say, great, because my share goes up every time you guys boot me out. Because there was a disconnect between the people at the top of the house and the agents. I was working with the people that were actually producing.
Yeah.
The other thing I found strange, like we're building a relationship, and when I go to either the industry conferences or speaking events or whatever, lenders over in one corner, brokers over in the other corner, and quite frankly, a lot of lenders had nothing but contempt for the brokers. They were like a necessary evil and maybe evil. And and I thought that was a strange kind of position to take with your partner. And I think that that's proven out, in the wealth and insurance business today. You see the same kind of approach, right? You build a community, there's lots of team building, there's lots of interaction. And it was important for me to make sure that I knew the people I was doing business with and that we were being helpful to them. And part of the problem with the model with the BRM is that you become so involved with that one person, right, that there is an aspect of who's in total control of the relationship. And I didn't want anyone to be in total control, but I wanted to be also part of that relationship. So the RVPs would interact with you guys, right? And the BRMs would deal with the agents. But I always made sure that I understood both from the BRM point of view what was going on or what agents were saying. Were they happy with the service? Because we'd have to flip people around all the time, right? And no one wants to have those uncomfortable conversations. It didn't bother me because I had seen that sometimes I'd start with a broker and put a BRM, didn't succeed. Then try again, didn't succeed. But maybe the third time was a charm and it did work. And I knew that the value proposition was there as long as we had the right people that were willing to work hard on evenings and weekends and everyone's financial incentives and economics were aligned, that we'd have a good outcome. And the same thing with the funders. Our funders were incredible. They did so much volume. And we tried to build a system where everyone understood that we needed as complete a deal as possible and that it was deal hygiene and that we were working together and not making outrageous demands. So get back to your question, like I was pretty selective about who we brought on. Now, I went out and recruited people too, like Peter Matheny would give me the time of day, right? He was a first line wannabe. They all were, because they had points for their 2-point sets, right? You
remember
had
that,
trinkets
yeah.
and trash. You could
Yeah.
get the loyalty stuff from the catalog, like cheap golf balls and shit you wouldn't want anyway, right?
Yeah.
And then you could use the points more powerfully to buy down the rate. So it was really hard because, say, they were up against a road warrior from RBC or CIBC, they needed that in their toolkit, right? And so to get people that were big first line junkies, I used to call them, I used to solicit them myself and say, give us a try, give us a try. And eventually it worked. And then, fate would have it, first line decides to exit the business, and then everything changed.
Yeah.
Right? And then BMO right after that.
Yeah.
And that's one of the things that worried me. Everyone thought, oh, that's a great event for you. I said, well, for Maple Trust, a great event, not a great event for the industry.
Yeah.
And that's why I was pleased to be able to bring Scotia into the space. And I talked to all the bank CEOs, right, in terms of what their appetite was. Not necessarily they were in for a sale, but every one of them said broker business will be done in 10 years. No one had a lot of confidence in it. That's why I think, Stephen Smith was very prescient. He understood what he had there. He just didn't want anyone else to have it.
So that move from Maple to Scotia, that's before us coming
2006.
into the industry. Yeah. And so you built all that trust with Maple, and for me, like it was a privilege to work with Scotia. Like that was a big deal to be able to get on that team with my BRM, and like that we worked for that, right? Was it right out of the gates when you made that transition to Scotia, given that like lenders were falling out of the especially brokers were probably very happy that was occurring because they were losing the other lenders, right? Like, was there ever an issue from Maple to Scotia to kind of continue to keep that trust with brokers?
Well, a lot of brokers, when they heard about the sale, were very skeptical and said it's over.
Yeah.
Right? Yeah. But one of the interesting things about the transaction was when the bank had done their due diligence, they understood the productivity and the value of the BRM piece. So they had a minimum requirement of people that had to sign before they do the deal. And Jim Smith had organized these dinners. He was all nervous about it, and it turned out that 100% signed. And not one of them left except when they were ready to retire. And we'd never advertised for someone to have that position. It was a destination, right? People would come to us and say they wanted to do it. But yeah, brokers were, there was a period there where it was sort of, I'm from Missouri, prove it to me that this isn't going to change. But if anything, it got stronger at that point in terms of that relationship. And we solidified it. We continued to sort of build on that platform at SMA, and SMA, did some ridiculous numbers, right? Like, I mean, would put First Line to shame, like it still does more than 60% of all the bank's origination, probably 70 right now, because the Salesforce number would be down, but it was, in very short order, proved it was dominant. The other thing that was good, I had always known the quality control from, say, Genworth, now Sagan and Canada Guarantee and CMHC was strong. And there was a lot of things in the broker space, right? That there's more frauds, there's more delinquencies, you don't get renewals, and no one will cross-sell. There was a lot of myth busting to do at the bank, which was very different because at Maple I didn't have to put up with that, right? And so that was challenging. And a lot of our own Maple people that came over were worried because a lot of them had started their careers at banks, right? And that's why they migrated away. So they weren't sure they wanted to go back into that kind of institutional environment, large organization. How would we fit? So, it was more strategic influencing and making SMA be a driving force within the bank. But people didn't understand. Branches don't do a lot of purchases. They do mostly refis at the branch level, if they're still doing that, because most branch origination continues to be reduced. In most of the banks now, they just refer it to the proprietary sales force because of the level of complexity involved. But if you looked at when I looked at Scotia, what was happening there, they had existing customers that would do a purchase when they were buying up or stepping up. But in the demographics, their mortgage customers were getting older and older, right? And so they weren't bringing in new customers. The broker space was 85% of us was new customers. Salesforce about 70. So we needed new customers, and we needed and we were able to demonstrate, that the growth in share went up every year, but the broker overall share of the market kept growing, right? So a rising tide lifted all boats, but it was fortuitous, right? But at that time, most people were naysayers. They didn't believe it. They didn't think it was sustainable. They didn't think, the kinds of numbers you guys are doing with a better way would not have been conceivable when I started Maple. Brokerage just didn't do that kind of volume, didn't have 400 agents just within your own franchise, right? Like that would have been a sizable shop. Like Invis might have had 600 or something nationally.
I'm curious to know, like when the transition happened to Scotia, and then even all your time at Scotia, did you ever battle the challenge that we're having today with brokers having to battle their own banks that they're working with?
Channel conflict?
Yeah.
Oh my God, that was day one. Worse than that for me, because when I sold Maple to Scotia, they had Scotia Express, which was their little mortgage brokerage business that they'd bought when they'd purchased Montreal Trust. And they bought their sales force from purchasing National Trust. And none of them had ever really been put into the organizational matrix in a way that made organizational sense, right? Everything, like banks typically are often criticized for being siloed. These were siloed within silos, right?
Yeah.
And there was a lot of duplication, different processes. None of the stuff made any sense to me. And so, we had to modernize it. We had to automate it. We had to, they didn't even have a complete roadmap of what the whole process looked like. And I'd built, not myself personally, but we'd retained basically programmers to build what is now MIMS in the bank as the LOS, right? And so, I was accustomed to thinking that there would be a lot more sophisticated technology, more sophisticated treasury, better hedging, better outcomes. And it wasn't the case, because a lot of stuff was manual. And so in the channel conflict, the branches would fight with Salesforce even before we had brokers. So because we couldn't do the integration, it took us 3 years, we had to offer a Maple product, which wasn't the Scotia product, for the first 3 years. And I was running the Scotia product with SES, and I had the Salesforce offering different features, and then the branches.
Wow.
And then there was channel conflict every day. We had to develop within the system rules about who touched it first, then owned it, but for sure. And when TD got back into it, I sat down with my counterpart and I said, "You're in for a shit show. Your Salesforce and the brokers are going to be at war if you don't figure this out. And then the pressure's going to come on you once you start putting up the big volume. Well, where's the cross sell?"
What do you think is driving it? Like, it's kind of coming back in a big wave right now. Like we just haven't dealt with anything, at least in my short career, like we're dealing with right now. Obviously, what you just mentioned is fucking way worse. But like now, what we're seeing now, like what is driving this big wave? Would you think?
I think that it has to do with what we've come through. I mean, look at it at a macro level. Coming through the pandemic, the volumes were so excessive and beyond what any of us would have thought was possible. The combination of the conditions around the pandemic and people looking at their housing and expanding, and the ultra low interest rates drove so much volume, particularly in the broker channel. And I think that coming out of that, the impact of that on pricing, on outlooks at Treasury, on outlooks across the bank, in terms of they're all now, rightly so, consumed with the idea that you got to own the household, you got to sell other products, you can't just do standalone mortgages because the spreads it's so competitive and it gets really skinny, right? So I think it is, from what I've witnessed, there isn't a clear focus and sort of somebody looking through one lens and saying this is irrational behavior. I think it'll pass, right?
Yeah.
Because I've seen it before, and then it'll swing back. And this kind of silly season, like it's not sustainable in my view for someone to come to the same institution and say a Salesforce gets one price, broker gets one price, branch gets one price. That's not fair to the customer. And most businesses are going to be judged on the success of the customer. And what's the customer satisfaction rate in an experience like that? Very bad, right? So those things, I believe, will correct themselves. And they've happened in the past, but you're absolutely right. it's destructive to the business and bad for the consumer.
Do you have like true scope on, because like when this stuff comes up, it's always, well, the broker's a more expensive source of business.
Yeah.
Which I don't have enough context or information to really quantify that. But when you think about,
Well,
and
you
I'm
have
not saying
enough context, simple context, origination cost. Essentially, the broker commission is twice what the sales force commission is. So you start there, and the retail commission is zero. So obviously, anything in the branch level is going to be the lowest cost of origination on a simple basis. Sales force around half. But then when you start to do the math on the sales force, there are all the other costs that, whether it's the management or what you're providing as employer to employee, and when you get to a certain scale, it levels out actually.
I always thought about the efficiency of a broker. Like, we're doing all the back end work, we're doing the doc
Absolutely.
collection, we're doing the underwriting, and we're going here. A good broker's going, here's a deal for you to review and approve. Like, the efficiency has to have an equation in there, right? Because the branch and the MMS are doing that all on their side.
Well, plus just the acquisition of the client in general too is a big piece of
Not only is it more efficient, but if let's think about the things that are most problematic for banks today, it's AML.
Yeah.
And so think about this. The level of sophistication of people like you as mortgage originators is much higher. That, like, branch staff, no fault of their own, are young people that might not have been in the chair 6 months. And look at all the rules changes that happen constantly. How could you possibly keep up with that? So having the skills that are required and the knowledge and the experience to originate mortgage at the branch level is really an impossible task today. Very, very difficult, right? Even when I came to the branch, there were managers and district vice presidents that kind of knew it, and the ones that I had the most problem was across the country who didn't get it, right?
Yeah.
And they were destructive to building the book. And so, I had to work with my retail partners and explain to them mortgage strategy and why this would make sense. And the interesting thing is exactly what you said. Once they started working with brokers, the branch folks loved them. Right, branch manager would tell me, "Oh, the package is done, everything is great, customers looked after, all of that." So you're right, but in terms of cost of origination, that's a factor, but it's misleading because when you do the cost comparison and you look at the opportunity cost, the broker business is more efficient. It's cleaner, cleaner audits, less frauds. The challenge for banks, typically the one I always had, was to figure out how could we do deepening with the customer. And it wasn't brokers who were in the way. What all the brokers I work with, for the most part, were willing to do it. It was we couldn't get out of our own way, right? We tried to set up dedicated people that would just do the broker business, and they're part of the branch, not part of the branch. And because of the way those systems worked, we weren't able to affect cross-sell. It was an execution issue for the banks, not for brokers. But brokers would get blamed for it. But that challenge will continue. That's something that all the institutions will face and have to overcome. I'm hopeful because the developments in technology and that through digitization and the fact that we do everything on our phones or any kind of mobile device or whatever, that will make more of that seamless, right? The integration, it's not like you got to go into bricks and mortar and talk to somebody. Those days are gone. So that should make the origination by brokers into a bank context more seamless and more effective.
Hey everyone, Dean here. Quick timeout from the episode to share with you the ABW Tuesday Mortgage Memo, your weekly market highlights sent directly to your inbox every Tuesday. This is certainly one you're not going to want to miss, so make sure to sign up now. You can do so with a link in the show notes, or you can head to joinabw.ca and sign up there. This is a high-level summary of market developments, regulatory updates, and housing trends every Tuesday. So hope you enjoy it, and back to the show.
Do you think with like the AML FinTrack regulations coming into the channel with mortgage brokers specifically, do you think that gives banks or lenders any more comfort with us in general as a
Well, I think it would give more comfort, but I mean, it's not optional, right? Listen,
But
even in the
more so
private
like-
lending space, I'm telling people we have the same AML restrictions, even though I'm not regulated by
Yeah.
OSFI, I still have to do know your customer and make
Yeah.
sure that we understand whether or not there's an opportunity here for the source of funds, or what the transaction is, or is this money
Yeah.
laundering, or is this, terrorist financing, all those things. So yes, they have to. I get pissed off when I heard brokers complaining about having to fill in the form and do all that. Like, those are table stakes. If you're not prepared to do that, you shouldn't be in the industry, in my
Yeah,
view,
no
right?
kidding.
And
No
and
kidding.
and I'm sure you guys wouldn't put up with an agent
No.
but there's still lots of them out there
Yeah.
doing it.
Well, I mean, we talk about this all the time. Like, until these audits come, like, we've talked to so many competitors that are like, they're not taking it seriously. They're not doing what they're supposed to do. Like, we know that that's
Well,
out
they
there.
should look at the Green Bank and see what that looks like.
Big fight, man.
What I
A
meant
big
by
fight.
comfort is like lenders that aren't in the channel. Like, would these
Oh
requirements,
yeah, for sure.
like,
Yeah,
make
yes.
it
No, you're
us
right.
more sophisticated in their eyes? Or
Yes, yes, and I think that their reputation as financial intermediaries for brokers over the past decade has improved materially. The kind of conversations I used to have are much different. Now, having said that, after the Great Recession, in 2008, I would spend, every quarter speaking to Americans, whether they're institutional shareholders or analysts, and broker was a dirty word, like because of the U.S. experience, and they didn't understand that there were more dissimilarities than similarities between the two origination schemes, or even the structure of mortgage lending in Canada, so different than the U.S. But as a result, brokers were a dirty word in the States because they created the financial crisis in many people's views. And then Australia went through this, big expansion, brokers were 80% of it. And then there were a number of issues that were picked up and basically set out in the Royal Commission there. But now that's swung back again, right? Brokers are the dominant originator in Australia, which is a market that people think is the closest to Canada in terms of both for residential mortgage origination, mortgage brokers, and banking. And so there are a number of parallels, but I think that in the past decade, for sure, and I give Gary and Chris, people like that, credit for that, because they've developed that discipline within their franchises, right? And also their own investment in technology and making sure that they want to properly screen deals, and whether you're using something like Flinks or something, like, to know whether or not there's something that's unsavory there. They're just as invested in that as the lenders are, in my view, and that's the right kind of partnership. And I think, like, as you've seen, there are a lot of people that were longer in the tooth in the business and thought this is all just government bullshit and regulation. And to a certain degree, I'm sympathetic with that. Like, I think that we've gone through a period in the regulatory environment where it's a little bit like a Christmas tree, right? We come up with a new rule, and then we put another ornament on, but we don't take anything off, right? and or we have rules for the sake of rules. And what happens in the larger lenders, like when you're at a large bank in particular, they love process, right? So if there's a regulatory thing, now let's build another process on top of a process that already isn't necessary, doesn't make any sense, right?
why is that? Is that just justification for their job, or like, where does that come from?
I'm not sure it's justification for the job. It's like the paradigm, because when you're trying to find those kinds of solutions, that's the approach that's always been taken, is build process, right? And so I don't think that, like, when we look at the industry as a whole and you look at what makes sense, it's really about capacity to pay, right, and repay. And we've gotten a little bit away from that, in my view. We've built rules that I'm not sure shouldn't be re-examined. But because we went through this difficult time, and with everyone worried about the interest rate shock and was there enough cushion, that all the regulators are patting themselves on the back that they save lenders from themselves. That's not my experience. And if you look at mortgage delinquencies, defaults from when it's been measured, it's not supported by regulatory intervention. Lenders know what they're doing, but more importantly, consumers know what they're doing. Consumers manage to a payment. When I was running London Trust, we had the first real estate recession, particularly in Toronto in the early 90s. And so I was doing mortgages in a subdivision, and one might be at Richmond Hill, and one might be in Vaughan, they'd be the same house multi to maybe $100,000 differential. How do you rationalize that on an appraisal, right? Well, because this neighborhood's more desirable, there's better transportation here, but they're the identical model homes, same lot size, everything, right? And when those things all turned upside down, including condos at the time, very few people when they were underwater walked away from their house. They fought and they fought. The last thing people will give up, because they have to live somewhere, but typically the last thing they'll give up is their house, right? So I think Canadians have been very responsible borrowers and they don't get enough credit. I think most lenders that I've been associated with or experienced or had some line of sight on have been prudent and mostly pragmatic and practical. The challenge is in the regulatory world is that those are all fixed costs for a lender, right? So, and there's no measure of proportionality. And by that, I mean, you've got to have the same fixed costs for compliance and audit if you're a small lender or a really big lender. And those costs don't go away and they just eat into your margin. And I think that sometimes we lose sight of the impact of regulation. And then you wonder why the mortgage spreads are so skinny, right? Yeah. And those large institutions, to save them from themselves, think, well, audit and compliance. But anyone who works in that environment will tell you your first line of defense is the first line, right? It's not the second line. It's not the third line. If you're running a business that's going to be less at risk, it's because the people that are dealing with the customer and dealing with the transaction are the ones who are the best judges rather, and they're your best safekeeper of the institution. So, I think that the regulatory pendulum's not going to swing back anytime soon, and so that's a challenge, and it's just something that you have to build into the cost of doing business today. But it's worth a look.
Yeah, I mean,
what's your experience? Like, you've obviously dealt with a lot of regulators, and I mean, the BRM model is so unique. As we've seen, I don't think any other lenders have adapted to it.
But some have tried to imitate it, but they haven't been successful. But when I look at what they've done, it ends up where they say, okay, we're going to use variable comp, but they're not really variable comp. It's a combination of variable and fixed, and you can't really make it work when you do that, right?
Yeah.
And so they haven't been willing to go all in because they weren't believers in it, which is very strange, right? Because in the investment banking situation or wealth situation, you've got lots of intermediaries that are in those large institutions that are paid on variable comp, but for some reason they think it doesn't work in the mortgage setting. I'm not sure. I think it would be very difficult today to get that approved. At the bank, the first few audits, they were amazed at how clean they were. They were very, very anxious about that. And the regulator as well, over time, was convinced. The good thing was when I was at Maple and I was regulated, and as we were growing, believe me, they were all over it, right? Like, I would do things as ridiculous as look at the discharges and show them where they went to Royal Bank and CIBC and stuff just to make a proof point, right? Like,
I like that.
These are high quality deals, right?
Yeah.
And so I think that it's like that's challenging. So if you're gonna if you're trying to get a bank approved today and you said, "Oh, I'm gonna pay my people variable," I think you're gonna wait even longer.
The piece I was going to bring up and what I like about this is you obviously push through that challenge with the regulator, and given what we're dealing with, FinTrack, what have you, I just think industries need to kind of band together. Like, this is a different example with the BRM, but even FinTrack, I'm extremely confident based on the guidelines that they've posted. They don't have a good, solid understanding of the broker industry.
I think FinTrack needs to reassess itself even on a broader basis, and I'll tell you why. I think that what happened at TD, a lot of it is because of the way FinTrack was set up, and I was there from the beginning, right? And they started, when I was at Maple, we were implementing. And so you got into the system of identifying an unusual transaction, and you file that on an incident report that then gets examined to see if it's a suspicious transaction, and then that kicks the ball rolling. The problem is, and what happened in the TD example, as I understand it, is if we had a more customer central lens instead of a transaction lens, it would be more efficient and be more effective from a money laundering point of view. So I think that needs to be examined. I think the system is old and it's outdated, and they haven't been thoughtful enough about saying, well, we need to reassess that right now. And then the other thing is we've tracked all this stuff for all these years, but the reality is we haven't prosecuted anybody. We have, like Canada has one of the worst records. And so we have all this great regulation that we're proud of, but what have been the consequences? And even in the early days, I used to get very frustrated. If you did have an incident mortgage fraud, the biggest challenge when I was at Maple at that time were grow ops, right? And trying to deal with that was so difficult. And there was always soft fraud. There'll always be some soft fraud, but if we're going to get the CRA confirmation, I think that'll put 90% of that to bed, right? But hard fraud, because of look at how you can reproduce bank statements today and stuff. Like a reasonable person, quite skilled, looking at it, couldn't detect it either.
I would
right?
not be able to detect.
No. And so, but what I'm saying is, screening systems today are way better. Technology's way better. All of those things need to be employed. And I think that in FinTrack's case, blaming, the person sitting in the wicket in a branch to make that kind of an assessment, I don't think it's fair. And I don't think it's necessary.
Yeah.
And so I think, we're not as quick as Canadians to criticize the efficacy of the regulator. Are they doing a good job? Are we getting value for money, right? No, we just layer on more regulation.
Yeah.
And is the outcome going to be any better, in my view, in terms of mortgage lending, whether you're looking at delinquencies or defaults or what happens in the industry? The answer is no.
I just want to touch on some tech, because I feel like the tech and the evolution of our industry and technology in general could help this precisely. But like you mentioned, just Gary and Chris, DLCG, their investment in velocity tech.
Gary's going to be your next legend.
Yeah,
right?
he's our next one.
Just so he knows that I'm first.
I've already let him know.
And what did he say?
He wasn't happy about it.
Good.
But that's okay. That was the
I'm
point.
happy.
But their investment in tech is, like, for us, it's a huge piece of our partnership.
Yes.
It means everything, because you have to be certain size of scale to be able to afford to continue to invest in it.
Yes.
And I feel like it's a big reason why the U.S. we spend a lot of time coaching in the U.S. and it's a really big reason why the U.S. is so ahead of us in a lot of this stuff. Like some of the things that we're looking to implement in velocity, it's been around for 10 years in the
Or
US.
longer.
Yeah.
But they're really great with tech, but they still can't put a mortgage to bed at the same time that you can in Canada, right?
Really?
Yeah, I used to be able to do them within 48 hours or less. You're lucky in 15 to 30 days there. So I have great tech. I go down to all of those digital conferences, and then they're all applauding the technology, Black Knight, all this stuff. And then I'd say, well, from when you get a commitment to when you fund, how long? And so they're not as efficient as Canadian lenders from a practical point of view. But you're right. The technology in the space is very old, right?
Yeah.
For the most part. And maybe generative AI will help. I think it's a little bit overblown, but the tech is improving a lot. And there's a lot of good tech and new tech out there, which will help, I agree with you, the industry. And it's cheaper, right, than it ever used to be.
Do you see like consolidation of smaller brokerages and just networks in general to be able to?
I think on a tech basis, that's where it'll happen,
Yeah.
right? One of your competitors has a tech stack that's very impressive that they've built separate from the brokerage, the Vine Group.
Yeah.
And I've seen demonstrations of that tech, and that's the most far-reaching I've ever seen someone take it. Philogis is exiting, right?
Mm-hmm.
So but they've just milked that cow for years, right?
Yeah.
They haven't reinvested in it. It's not a great system, right?
Yeah.
It did a lot of volume and it made a lot of money, but it's dated and it's time to have a refresh. Gary and Chris have spent a lot of money building out Velocity, right?
Yeah.
Some of the others, but even on the servicing side, I've been through this for Maple Financial, trying to find, the right system. You buy it, like Nesto's built some pretty impressive tech, right? Fundmore are building some impressive tech. Like there are bits and pieces, but it's not there yet. There's not something that you can just pull off the shelf for the industry.
Do you think, like with AI and all those pieces, I personally don't think it's ever going to replace the mortgage broker, but I do think it's going to replace brokers that aren't using it.
I think people misunderstand whether it's AI, and I think AI is it's a little frothy right now, and AI isn't that reliable. Like you have someone checking all the time, right?
Yeah.
So and whether I assume that will get better, but in order for a lender or a financial intermediary to rely on it, you've got to have some human checking. So there's that human component. I think in a mortgage transaction, I'd be interested to see what you think. In my experience, no matter how financially sophisticated the borrower is, people want to have someone rabbi them through the process of getting a mortgage. Either they're too busy, they don't have time, it's too big a pain in the ass, there's too many rules. Why not this and then that, right? And this is what scares me about LTI with the new rules and the 4.5 limit. You're going to have some really ultra high net worth people that used to get deals at private banks and the banks that aren't going to be able to get them anymore. And they're going to go, why? Because they have the total capacity to pay, right? I'm worth 65 million, but you won't lend me this money. Like the mind boggles.
I mean,
Oh, sorry. I was just going to say, like, I still think there's such an emotional component
There
to
is.
purchasing, obtaining financing. Like, you can have different point of views from spouses or
Yeah, well,
whoever's on the
spouses are
transaction.
always arguing about
Right, and
who
then-
wants the house. Is the mortgage too big? Is it variable? Is it fixed? Like,
Well, right, and there's no
everyone's got an
way-
opinion about a
And
mortgage.
there's no way that you're going to talk that through the screen. So I think that's where the need of the broker is always going to be, is just to have that emotional conversation with somebody, connect with them, build a relationship,
Absolutely.
a personality. Like that's
Let's
gonna
get
push it
real
through.
here. People, I'd say 5 out of 10 clients can't even upload the documents that you've requested without having a conversation. Like
know.
people need help with that
Well,
piece alone.
That's very
Right,
interesting.
let alone the rest of it.
If you talk to people that are in the servicing business, they'll tell you they're not spending time on new releases and tech. They're spending time on explaining administrative things exactly like that. How do you upload it?
Yeah.
How does it work? You're so right.
Yeah.
When we did eHome as sort of an end to end, that you never have to speak to a person, you could get from end to end, but you knew you had to have an off ramp because people don't trust what the screen's saying anyways, right? They want to hear a person tell them, right?
Yeah.
And you need knowledgeable people. Like you need people. The problem is that a lot of the contact centers and stuff aren't stacked with people that know anything about mortgages, right? So my belief has always been, if you've got people who are skilled and you reward them appropriately and make them work with technology, I call it digital plus. I think that could be the future, but I still think we're a long way away from it.
Yeah. I want to jump into just some of the daily practices you kind of maintain as a leader, especially your strategies. To
Delegate.
Delegate. That's a good one.
That's a good one.
What about just staying ahead of the curve? Like, how do you, like, you've always been ahead of the curve.
I had a friend that I met at McMillan Bench who ended up being a real estate developer, and he told me something very early in my career we were working on some deals, and you're working, you never lift your head up, and he said you should dedicate a certain part of every day to strategy, to just thinking about the space you're in, where you want to be, what kind of outcome. And people don't do that, right? They think I'm here and I got to get through this, but it really does help. I find it help. I try first thing in the day to try to organize my thoughts, looking at the calendar like way down the road. Like we're working right now, getting some term sheets in, trying to build that all again. And you get so caught up in the sausage making that you lose sight of where it is you want to be. So I think as a leader, if you want to understand do you really have strategic objectives? Like a lot of people tell you they do. But what's the end game? They can't articulate it for you. Like if you can't do that in an elevator pitch, then you don't, in my view, really know where you're going. So unless and to do that, that's not something you just say, oh, point A, when I start out, before I begin the run, this is what I want. Like you've got to keep reinvesting in yourself, in your strategic thinking and your outcomes. And that's the other thing that's really important when you're building out these organizations like you are, is strategic influencing, right? People don't spend enough time saying what relationships are important, what ones do I need to invest in, and all of those things should be, in my view, a part of your leadership attributes. So like people talk about hard skills and soft skills. And when they say that, they're talking about financial acumen for the hard skills, soft skills, people skills. But what they don't talk about is the strategic skills a lot. And I think that, if you've got a vision, you know what you want to do with a better way. it's not as simple as saying I want this many agents or I want this much revenue, right? It's what is it you want to build and how do we get there, right? And I think you have to spend at least a certain part of every day just unclutter your mind and think about that. And then, am I on track? You know,
Would you do
check
that
in
by
every month, check in every 6 months with yourself and say, how are we doing?
Would you do that? Would you do strategic thinking by yourself?
Yes.
And with a group as well?
With first by myself
Yeah.
and then bounce those ideas off other people for sure. Even with management meetings and stuff, like I don't like having a lot of meetings for the sake of having meetings.
Yeah,
Drove me
agreed.
crazy,
Yeah.
right? I don't manage that way. If you talk to anyone who's worked with me, they'll tell you I'm very flatline. I don't do that. But I would say, like, let's get in a room and let's talk about this stuff and force people to think, right? And that's one thing that people don't like to do, be put on the spot and say, force you to think about it. And I've had some pretty good mentors and that were very successful. And I was always impressed by how honest they could be with themselves, right? Like they'd say, these are my strengths, these are my weaknesses, this is where I'm fucking up, I'm not doing a good enough job at that, which is hard to do, right?
Yeah.
And they did it without any, like totally dispassionately. Oh, I should have done this better. Oh, I didn't do this very well, right? I go, well, you scored, you won, like you should be happy.
Yeah.
No, if you do it, yeah, everyone says you learn more from your mistakes than your successes. And I think there's a certain degree of truth to that, but you won't unless you're conscious of all of it, right?
Yeah.
And so I know even with my own sons and that, and I'm listening to them, and you know, everybody gets wrapped up in the moment, and I don't know, maybe it was because I spent a lot of my adult career in politics and looking at strategy and outcomes and seeing where you started and end up with what's the possible, that I've always tried to have like not so much a whiteboard outlook, but to look down the road and say, okay, I literally can tell you with Maple Financial, I said to Daniel, like, this is where I want to be at the end of year one, and we'll be nowhere. Oh no, what? I said, no, trust me. Find liquidity always takes longer. You gotta, kiss a lot of toads to find a prince. Gonna be very difficult. Gonna meet all kinds of new friends who are assholes by the end of the year, right?
Yeah.
And then the next year you start to build, you get some momentum, and then the next year, and I said, that plan is ever fresh, and it's always, sort of constantly renewing it. But you have to have a goal and a target, right? And I think a lot of people when they get into business, it's just sort of like, we'll roll the dice.
How did you and how do you inspire your team especially in uncertain times, like when things are not so good?
Well, I think that my view was that the test of leadership was when you step and you look behind you, did anyone follow you? Right. So if you're stepping and they're not following you, you're not leading very well. You might think you are,
Yeah.
and people might tell you are. And so I think that when things are tough, I think it's not just like give everyone a group hug, it's be honest about it, right? And say, here are our challenges. And this is what we need to do to overcome and get the buy-in that we're all doing this together. And I think in a leadership position, if people think you're authentic and that they see like you really do give a fuck and you're not just saying the words and
Yeah.
mouthing the words, but you're in there all pulling together in the same direction, that really does work, right? It's like being on any team. There's different elements, different personalities, but to build the right chemistry, you need the right mixes. And so what you do is you try to get the best out of all your people, but understand that people have certain strengths, they have certain weaknesses, and you're not going to perfect them. So you accept that and you go forward. And you actually have to like be a human being in these circumstances too, right? People have family issues, all that kind of stuff. You have to have some compassion. You have to care about people, because one of the things that gets overlooked, not so much in the service business, is that I always felt that human capital is your most important capital.
Yeah.
Right. And so you should judge yourself, like, how well have I looked after that? And it's not just doing surveys and employee sat and all that. Like, do people really like working there? Do they like working with you? Do they enjoy doing what they were doing? And I've been pretty fortunate in the mortgage space, even though I didn't come to it naturally or it wasn't my ambition. But I always enjoyed it. I always enjoyed the business, like the people, like doing it. And I think that comes across, right?
Well, correct me if I'm wrong, but that core group of Maple
Yeah.
staffers that you are working with have been with you for however many years
Probably
it's
too
been.
long.
But that, I
I
mean,
should have
that,
cashiered a bunch of them, but
that has to be a testament, though, to the passion of the job
Yeah.
and deploying down your philosophies and having people buy in and move on to what you're doing, right?
But at the same time, you have to be willing to have the awkward conversations, right?
Yeah.
And that's never easy. No one wants
Yeah.
to be in conflict, but you have to do it. I found, like, even with my teams, like I would stand up brokers and agents in a room and say, like, we're going to play by these rules, but if you're consciously blowing something by me, it's a capital offense. You're gone. Like, it's a lifetime ban. Right. And my guys, well, you said this volume, can't do that. I go, but if you don't have a public hanging to set the example that you're not putting up with that, what are you going to do? Some people thought that I was being a little bit harsh in some of the circumstances, like, this isn't really as bad as all that. And I go, but that's where it begins. That's the thin edge of the wedge. Like, if you don't demonstrate, you're not going to, those aren't the standards that you set. As long as you've clearly articulated them, right? Said, here are my expectations for you as a mortgage broker, for you as a BRM, for you as a funder, for you as an employee, for you as a supplier, you as a partner. And then when those aren't met, you can go back in good conscience and say, no, that's not working for me.
Yeah.
But you have to be willing and able to do that. A lot of people that work with you, they don't want to get their hands dirty with that stuff, right? And I get it, but you have to be willing to do that as well. But more importantly, I think that, as you said, you have to, if you can keep a group of talented people around you, and not all of them like each other equally, as you guys know, right? But they don't have to be best friends, but they have to be collegial, and they have to have a common purpose, and they have to be jazzed up about it a bit, right? Who wants to go into a workplace and you're not feeling good about what you're doing or the people you're doing it with? Then why bother?
Yeah. I actually have a question. So, being from Vancouver, we're dealing with some
A lot
turmoil.
of rain.
Yeah. Well, as Canucks fans, we're dealing with some.
Oh, that dressing room thing
Right.
was crazy.
Yeah. So, like, you got your two top performers not getting along at a real, bad point in that relationship. Did you ever have any, like, high achieving people in your organization that didn't get along and it ultimately blew, to a point where you had to, and how would you deal with that?
Constant, right?
Yeah.
You got a lot of temperamental chefs and people leading businesses in key positions. They got domain knowledge, but one can't get along with the other, but they both have skill sets. You need them. And that's like coaching. Like, I don't understand why Talkin didn't punch them both out by now, but
I know.
I just said
We
that.
just
like,
talked about that.
Like it's that old school talking
Yeah.
mentality.
Yeah.
Like, how has he not done this
Like,
yet?
he's coming off as, like, I mean, even Bruce Boudreau, I heard him saying, like, this was a problem then.
Yeah, I
right?
heard that
like
too,
that,
yeah.
And I'm going, so this has been a problem for a long time.
Yeah.
And now they're, part of it is they're not producing. If they were producing, and they're paying them a lot of money not to produce.
Yeah.
So, I mean, with the cap is all a big part of it from a management concern now. It's not just as simple as I'm going to get these guys to work together and play together. But they've let that get so bad, and it's past its by sell date, right? They got to do it. It's a cancer. They got to cut it out.
Is it just that simple? Like, when you're winning, it goes away?
Well,
And
winning
that,
it covers up a lot of sins, right? So,
and is that the kind of same in business? It's like, hey, we're succeeding.
Yeah, when people are succeeding, they can tolerate, in my
Yeah.
experience, each other
Yeah.
much more so. And then you just gotta, sometimes you can find a healer that can work with.
Yeah, that's
If
a
there are
good point.
two
Healer, I
parties
like
that are in opposition, or not sure they're opposition, or they just don't get along, or one person is, their styles don't fit, or what I would always do is I'd take both offending parties separately into a room and try to talk to them about, like, why do you, did you really need to say that? Was that, and then they vent and they get it out. But you have to make it clear, like, we all have to try to get along in the room, right? Just same kind of dynamic.
Yeah.
And usually, like, on those great teams, I'm very close, as with Serge Savard, telling about all those Montreal Cup teams and the dynamic in the room and who did what. Like, some people lead by example. Some people are more rah-rah and vocal. Some people, like, talk. It was a problem in the dressing room. You just punch the guy in the head, right? And that would settle it. And you need sort of a mix of the sweet and the sour in that, in order to keep it all moving along. But yeah, you're always going to have high performers. I used to say thoroughbreds can get a little skittish in the barn before they run the race, right? You gotta be willing to manage them.
Would you do any sort of personality tests or assessments to like when hiring and make
Yeah,
sure
we
you
did
have a,
those pop
yeah,
tests all the time. I
yeah,
found them remarkably unreliable.
really,
But
eh? Yeah.
yeah,
Well, everyone was lying on their pops.
yeah, I think so.
Yeah.
I don't know. I read it. I go, I don't know.
So I just want to move forward and look to wrap up. Like any trends or opportunities that you're noticing in the channel right now for mortgage brokers to really hone in on?
I'd say two things. Like one, if I was a broker out there, just in terms of being in the business in the space, I'd feel good about it because the share keeps going up and the opportunities I think are larger and growing. And I think that in terms of the alternate lending space that I'm entering, I see most of the brokers that I'm interacting with have seen their share of those apps go up materially, right? So I say to them, get up to speed on everything that works. Don't just focus like people used to do on the high ratio or the prime. Make sure that you've got all the tools in that kit, or you have producers that are good at that, and they may be really good at prime, or you got people who, some people are much better with higher net worth borrowers than others, right? A little bit more white glove sensitive treatment. As long as you realize that you're going to need a variety of solutions and a variety of different kinds of people to deal with that, you should feel good about the space. I think technology is, as you said, it's leading you to better outcomes where you're going to be able to be more efficient, make more money, recruit the right kind of people. All those things are good. And I know people get upset about the amount of regulation and the frustration dealing with lenders. And my advice to them would be to stick to your knitting, focus on the outcomes that you want, right? Is it recruitment? Is it revenues? Is it units? Is it business mix? All of those things should be in your plan at the beginning of the year, reviewed at the end of the year, and say, were we successful here? Were we partially successful? We were were we green? Were we yellow? Were we red? Whatever metric you want to use. But I think that it's interesting. People are still attracted to the space, right? And that's a good thing.
Yeah.
I think that people come into it and then they don't realize it's much more complex than they think. You have to work a lot harder, right? But once they get their game down, they can be very productive and have a very rewarding, not just financially rewarding, but rewarding, because when you're helping people get housed, right, they're very appreciative, and it keeps you coming back for more. But the space overall, I'm still very positive on the outlook, regardless of what other developments take place, right?
One thing we've noticed for an opportunity, we're pushing this within our brokerage, is just the growth of alternative and private space, especially with what we were talking about earlier around the conflict at the banks and just constant rate wars. This space is so much, like you can avoid a lot of that nonsense, right? And it's just growing so significantly for all these reasons, LTI, all this stuff that's going on. And it's, it's obviously you see that because you're building Maple Financial. Maybe we can just chat about that. Like
I think that my investigation, like I started when I was on my farewell tour, which seemed to take about a year, but I was doing the research, right? And I was asking people like yourselves, like, what are your pain points? And, it was the typical thing. Somebody would deal with a MEC or a credit union, and it was turnaround time, or they were in funds and then they weren't. And so I start sending deals, and then I can't send my deals. And, what I've always observed for most successful brokerages is, they'll pick sort of 3 steady lenders that they know that they're going to have and go to, and they may vary it, but they know that they're reliable. And every once in a while, they'll try something else. But you don't want to be in a situation where you're good for a month and then you're inconsistent. And you're inconsistent both in terms of having funding or with outcomes. We have an appetite for this now we don't, right?
Yeah.
People want to know with some certainty what it is you do and how quickly you can do it. What I witnessed in the space is that it's very balkanized, low levels of sophistication, turnaround time's terrible. Don't give a shit about, like, some of these mix just tell me like they think they're doing you a favor that you brought them business. I just get so excited. I go, good, because I'm going to kill you because you don't understand relationships, right? So I see there's lots of opportunity there. We're bringing the BRM model to that, which I know will be successful. And we're looking at capacity to pay. And another feature that most of the people in the space don't really take seriously that I've witnessed so far is that we want to bring anybody that we're going to underwrite, we want to make sure we have an exit strategy. I've seen a lot of people get jammed up now where a broker will put them into a private lender and then they got nowhere to go, right? And in the old days, you were at home, you were at Equitable, you basically got a credit rehab and you switched out to the bank. Well, that's a lot more difficult today than it ever was before. So you need more options. So I think that that space, there's a big opportunity, not just that volume will go up, but bring the value proposition and service levels that aren't currently being experienced. And you see it yourselves, like the level of sophistication of some of these lenders is it's not very high, right?
Yeah.
Like, I don't think most of them were really lenders. They were in other roles, and they end up in these kinds of positions.
Well, I think you made a good point, like just the relationship side of it. A lot of these folks like don't have that skill set, like on the
Well, they
private
don't care
side.
about it.
Yeah,
So
they
when
don't.
when I talk to them,
they don't care. Yeah, that's totally it.
It's like
we're doing you a favor because we're approving this, right? Yeah. And the BRM model, to me, like that's the space that it makes the most sense out of any.
Well, what the thing that I like about this, because BRMs would been bitching at me since Maple Trust to say, oh, why can't I have an assistant? Why can't I incorporate myself? Why can't I do all that? Well, it wasn't possible. They're employees.
Yeah.
In this model, because the way all the private lending works, you have to use your mortgage brokerage license when you're dealing with FSRA. So everyone's a mortgage agent that's a BRM, and then they can incorporate themselves. So I'm telling them, you can do half the dollars, and it's the same outcome in terms of what you put in your pocket, right?
Yeah.
And then, you could be like Ron Butler and run all your wine through your business. Or
You know what? That's actually a super attractive model for a BRM now.
tax effective. Yeah.
And just like, I mean, I hopefully from Scotia's sake, there's no BRMs listening to this because those guys are worked to the bone right now. This year they are.
Well, I think they're all pretty aware of it.
Yeah. But like to be able to hire an assistant and build out your own little pod of a team to support you, that's pretty attractive.
Well, I was fortunate because like Rob Lowe was one of our top producing BRMs, but he decided to leave the bank and he was going to the States, and he's got his kid in competitive hockey. He's actually in a tournament down there this weekend. He's a goalie, and he came to me and said he wanted to leave. He was going to leave anyway, and so we were able to get him to help us. We ran some pilots and do all that and test and learn and see the systems, and then as people are getting ready and they can take early retirement and they don't want to do that kind of volume, there's a whole pipeline of them that want to come, right?
Yeah.
And so it makes it a lot easier because I know they know how to underwrite, so I know they know credit, but I know what their work ethic is. But they don't have to kill themselves. I say to them, you do as much as you want because all I have are variable costs. I'm not paying the 17% on the employee stuff anymore, so I'll just go get 5 more.
Yeah.
Like if you only want to do that, that's fine with me.
Yeah.
Right. And they love the idea of it being tax effective. Like, I mean, our marginal rates here are so ridiculous, right?
Yeah.
It's crazy.
Do you, like on Maple Financial, like we talk private lending. Do you ever see like an arm of doing more of like a B, near B type model?
Well, we're actually going to have a product suite that's broader than that because we've signed some third-party agreements. So we're going to do direct funding, and then we're going to focus as we build that portfolio. The credit mix and type will probably change over time, but the way it works when you're getting liquidity, you want to keep it as clean as possible. So you're going to be a little more conservative as you build, and they grow confidence in you as they're giving you money. But at the same time, so we've picked up. I wanted to sign some third-party agreements that would allow BRMs to still offer products to their brokers that we couldn't do, or if we do run out of funds, they still got options. So we have 2 of those signed, one that we're entering into that's going to be very powerful. And so we'll have a suite. And then if we want to do beyond that to originate, which isn't our intention, like people come to me and say, oh, you want to do high ratio? I said, I don't want to be an approved lender. I want to do that. There's no money and there's no spread in that. I want to be regulated. I'm regulated enough even in the private space. The whole idea was not to be constrained by all that stuff, right?
Yeah.
And so, I always resented that Steven could screw around at FirstNet because he wasn't regulated and I was, right?
Yeah.
And he used to say to me, even though he was selling on and the banks would require you to certify you'd met all the rules, he goes, oh, it takes them 2 years of an audit to find out, right? So he go, oh, oops, right? And so I wanted to have that agility and flexibility, but still going to underwrite to an institutional level. It's not about
Yeah.
the quality of the underwriting, or it's about making sure that the process works.
Well, once you get into like we look at Equitable Bank, they're our top
Yeah.
alternative lender in our brokerage. When you get into that type of underwriting, you're getting into 12 months bank statements. You're getting into a lot more like documentation than you would with any prime lender. And the BRM model makes so much sense in that space. And so if you start to nudge into that type of a product line, like
Yeah.
again, these BRMs are going to be like, brokers are going to absolutely love that.
Yeah, I mean, Equitable's pretty much had their own way, and they've
Yeah.
been like what Home used to be. They're the
Yeah.
darling, and Andrew and
Yeah, they truly are.
team.
Yeah.
They've done a great
Yeah.
job of finding niches, right? They really are a challenger bank. What I was concerned about, what I really wanted to make sure that we did with the BRMs, what they want more than anything, like the new Maple Financial BRMs, is they want that autonomy again. Like they want to have the autonomy about making the decision on the underwriting.
Yeah.
Because then you control your own destiny, and that's part of like what's the psychic reward of working the business. If you got someone always like it's Ace or it's somebody else checking you on the credit, another dog or a rate, or fucking around on the rate,
Yeah.
when you know this is silly season,
Yeah.
right? Like this isn't the way it should be. So I wanted to make sure that they're going to be satisfied that they have the autonomy they need to use their skill set so that they're productive and not frustrated. Building out templates and stuff like that, telling people who are very skilled in making decisions around credit to fill in a bunch of documents, to me, that's not going in the right direction.
So, I mean, maybe this is where we look to wrap. Like, when can we get access to Maple Financial? Because we're down for it.
By the end of February, we'll have our own direct funding and the third-party stuff up and running. We're doing some training on it next week. We've got I've got a team of BRMs that are staggered in. So Frank Terrapore had retired, and he'd never taken a holiday his whole career with me, Maple or Scotia. He was just a workaholic. So thankfully he's taken off. He's been in Dubai. He's like, and then when I talked to him, and he wants to do it, but he said, I don't want to work that hard again. I said, Frank, you don't have to. You work as hard as you want. What do you mean? I said, because the model works, so it's okay. So he's in Dubai, coming back the end of February, and he'll roll out. And I've got 3 more that are starting in that time frame, and then more in the pipeline. So as we see the funding, direct funding and the third party, I don't want to overpromise, underdeliver, and say, oh, like we're funding shit and I can take out all these deals and then not be able to do it. So I'd rather do it right and do it slower. But I have learned a lot in terms of, like, I looked at the credit quality of the pilot. We ran this pilot with Vine, which was easy to do because they have their own centralized underwriting. So you don't have to deal with a whole bunch of agents. You're just dealing with a select group of underwriters, and they can feed it back. But the credit quality was very high, like right across. There were deals that I would have done at the bank. There were deals that should have been done. Like, so you'd have one going into Glass Lake, and they don't want to do it, and it gets done at Royal. Like, bizarre. Yeah. Very inconsistent. Yeah.
So if you kind of go back to your comments on your strategy sessions that you do with yourself, you're looking Ontario, Alberta.
No,
BC?
we're regulated and registered. We're ready to go in BC, in Alberta and Ontario. So we're good to go now. And then the other ones are Quebec's the most difficult and the most expensive, and there's a lot of opportunity there. But pick your poison. That's something for later because it's a higher degree of difficulty and lower reward in the beginning.
Yeah.
So I do want to get there, but because of it's not just the language issues and the level of regulation. You like when you're there, you actually have to be resident there, right, in order to be in this business. So with your license, So there's a lot of challenges to there, but the other provinces will add in, but we won't have, like, for the next couple of years, there'll be enough business in BC, Ontario, and Alberta that,
for sure.
We won't go further afield. But I do want to, I want to be in the prairies as well. right? And
Yeah.
we will be, because a lot of the brokers I've dealt with for 30 years, they don't get equitable service there.
Yeah, you're right. Yeah. Yeah.
How are you going to look to onboard brokerages and brokers to work with?
How am I going to look to do it?
Like, are you going to vet them? Like,
I'm going
is
to
there
call
gonna
up Dean and Derek and say, send me some deals and good ones. That'll be.
The last thing I was just going to wrap up with is just maybe any advice or comments on an inspiring leader or legend in this space.
Well, I think that in any space, right, it's a combination of perseverance and perspiration. You know, if you can't outthink someone, you can always outwork them. And I would say the other thing, I've always believed that even a bad strategy is better than having no strategy at all, right? And then if it doesn't work, you can go back to the drawing board. And and I think people get too stuck in. You should be willing to change, like be nimble. Like if it's not working, don't stick with it, right?
Yeah.
And try something else.
Yeah, I love it. Thank you very much, man.
Oh,
This
my
is
pleasure.
Unreal. Yeah, I
Thank
really
you, sir.
appreciate it.
Glad to see you guys.
Yeah. Thank you.
Thank you for tuning in. If you found value in this show, please subscribe to our channel on your preferred platform. We're available on Spotify, Apple Podcasts, and YouTube. Your support is incredibly appreciated. We also welcome your reviews and feedback, which are crucial in helping us deliver outstanding educational content. Feel free to share your thoughts. A 5-star review would be fantastic if you think we earned it. Lastly, a vital announcement about Backpack Buddies, our chosen charity for 2025. This remarkable organization addresses a hidden hunger issue many are unaware of in British Columbia. While school districts provide meals during school hours, numerous children face food scarcity at home, particularly during the weekends. Backpack Buddies steps in to support these vulnerable children, ensuring they have easy to prepare, familiar food for weekends. This is achieved through collaborations with schools and an extensive distribution network. Your contribution can make a significant difference. With just $20, you can give a child in need a food bag from Backpack Buddies filled with enough meals and snacks to sustain them over the weekend and more. Once again, thank you for listening, and see you on the next one.